Good morning, ladies and gentlemen. This is Butch Shorak, Options University. It's Monday, July 9th, 2012. Access to this webinar is for informational and educational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options. We're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and we expect you to take responsibility for your account. And the week that we just had certainly had some economic announcements in it, and Monday could have been called Merger Monday, something we used to see in the past where we had 4 mergers that took place on Monday. One of them was Bristol Myers Squibb, Dell, Quest Software, Brightpoint, and Lincare Holdings were some of those that were involved with the mergers. Economic announcement really didn't do much on Monday, but the market was up a bit Monday as we had good news, good feelings going into the market. Tuesday was an abbreviated day, as Tuesday we had factory orders at 10 o'clock. The market closed at 1 in anticipation of the 4th of July holiday. It was an early close, and the market had a huge run-up on the day, gaining 2.4% in the energy sector. S&P managed to gain about 0.6%, and crude oil, which surged almost 5%, certainly had the market moving as we went into that holiday weekend. Thursday, we had news come out, ADP employment report. It certainly wasn't any disappointment. Jobless claims on Thursday. So we saw that those things came out on Thursday, and they certainly were good news. And in spite of it, the S&P fell 0.5%, and we had the central banks taking action to help economic growth. China cut its interest rates for the second time in a row, and still the market was heading down on Thursday. As we went into Friday, we had employment numbers which came out for the month of June. And, well, they were a bit disappointing. Actually, they were the same at 8.2%, but the number of new jobs certainly was a bit disappointing. And we saw Friday tail off very, very hard. Technology being the worst performing sector, down 1.5%. Broad market decline was down about 0.9%. And had it not been for a little bit of a rise at the end of the day, it certainly would have been much worse on Friday, as we did rally a little bit going into the close. But economically last week, in that 4-day trading week, it was exactly as we expected. We saw a low volume on Tuesday, and then we saw things kind of pick up on Thursday and Friday as far as the volume is concerned as we go into the next week. As we go into the next week, our emphasis certainly should end up being on earnings, as Alcoa reports earnings Monday afternoon, and that for many is the beginning of the earnings season. We see that we have not much happening on Monday economically. As we look at Tuesday, we got same-store sales coming out on Tuesday with Goldman Sachs. Same-store sales coming out at 745. Redbook no longer moves the market. On Wednesday, we have the FOMC meeting, which really we don't expect to move the market all that much. And then finally, we get down to some real news on Thursday as we get jobless claims coming out, which they do every week, import and export prices coming out on Thursday. And then Friday, July 13th, Friday the 13th, we have PPI and consumer sentiment, both which will be capable of moving the market going into the weekend. So, earnings start on Monday. We don't have much for economic announcements until we get to Thursday and Friday, so there could be a bit of volatility in the market as we look at the coming week. All right, with that volatility gives us the ability to utilize some of our sales techniques and become sellers in the market to pull theta out of the market. So no matter which way the market goes, up, down, or sideways, if you're using your option techniques properly, you can pull money out of the market. So if we look at the SPX this week, we see that we were in a sideways trend going across here like so, trading well within our yellow zone. Had a breakout last Friday, which was Friday a week ago, and then as we went into the holiday week with our 4 days there, we ended up down just a bit, 0.6% for the week, as we saw Monday, Tuesday, Wednesday, and Thursday. Now, as far as our trend, well, we went into an uptrend when we broke out here. And so now the next trend, if we have a change in trend, is going to be a sideways trend. We've got the 30-day moving average coming right in here. And we'll see how far back we retrace before we get our next bounce, or if we retrace at all. And then we see if we get a higher high. This is our high that we're concerned with. If we go past that high, we'll have a continuation of that upward trend. I really don't expect that if you want to know what I think, but remember, we trade what we see, not what we think. I think that this was nothing more than a bit of a head fake. And I think that what we'll see is still trading within this same range. There is no great news taking place out there that should make the market have that July rally, unless we get great earnings, and I think that is highly suspect too. Let's take a look at a little smaller chart and take a look at that week that was. And here we were Friday. As we saw, there was our previous high, which was a bit of a move above our yellow zone, a bit of a move on this day back then. And we really didn't break out as we came back down and established a new low in the market. All right, a new low for this downward cycle, that is. All right, and then we reversed our cycle, and our overall trend was sideways, as we can see from our 30-day moving average. And then what we saw was us take out a couple weeks ago and begin to head back up, taking us back into an up cycle in a sideways market. Okay, so now what's happened is we broke above that previous high, like so, on Monday, stayed there on Tuesday, got our reversal signal with an inside day on Thursday. Remember, Wednesday was the holiday. And then on Friday, we got confirmation with a lower low, lower high. And we are now currently in a down cycle. Now, we are in an uptrend because we broke above our previous highs and our previous trading range. But my thought is this is going to be nothing more than a head fake when it's all said and done. And we'll be back trading in this range. First target down here at 1335. We got this diagonal trend line sitting right in here. The 200-day moving average is sitting at 1305. Remember, we tend to go down much faster than we go up. So I would expect further moves to the downside unless we get some fantabulous news out of earnings, which I think is highly unlikely. With that, let's take a look at the Dow, see what the Dow did last week. As we look at the Dow Jones, our 30 stocks looked very much like the S&P, came down to that 50-day moving average on Friday, and we'll see whether we bounce from there or whether we continue down into headed for that 200-day moving average. Remember, in a sideways trend, this 30-day moving average doesn't provide much support or resistance. So my expectations is we'll probably see us right down there headed for about that level on the Dow. Looking at the NASDAQ, which certainly got punished more on Friday than the others, we saw that it had a gap down, never filled the gap, continued on down. Absolutely confirmation of a change in cycle. All right, cycle is now down. Same move. Broke out on Monday and headed lower, most likely. All right, big move there. Look at that gap that we had from Thursday to Friday of a week ago. So big move. And during our holiday week, we got our little head fake, albeit on low volume. In the NASDAQ, we see it very similar to the S&P, only a little more accentuated, and that's what we expect out of the NASDAQ. Looking at the Russell 2000, we see that we went into that upcycle, certainly broke out into an uptrend, as we're in an uptrend here. With the upcycle that came there, had our breakout, and now on Friday, reversed. So we're in a down cycle in a uptrending market until we break down and possibly end up back down in here to reconfirm that sideways trending market. Again, this may just be a head fake. We'll know if we get a higher high than that and a lower low than that, whether we're going to end up with an uptrend for July and August. Nothing is guaranteed or written in stone. We shall see. Looking at the week that was, we see that the Dow was down 107 for the week. NASDAQ, I'm sorry, this was for Friday. So the Dow kind of let us down. NASDAQ was up a little bit on Friday. S&P down 7%. There's our percent change actually for the week. All these numbers were for the week, by the way. So we had a Russell up for the week. We had the NASDAQ up for the week. S&P down 7.5 and 107 down for the Dow. And as we see, the changes for the week varied as we looked at the different indexes there. And then look for a year-to-date. Everything is in positive numbers year-to-date. We've made that big comeback from that previous low that we had when we had given back everything that we had gained in the first quarter. So we're back up into positive numbers. Even the NASDAQ's up in double digits. So the market's looking healthy for the summer, even though we're not trading as high as we were at the end of the second quarter. Next, let's take a look at some of our different sectors. First, looking at the VIX, and we see that the VIX is back trading within its yellow zone. That number between 20 and 15, which it spends about 85% of its time in between those two numbers after that big pullback. Big jump in the VIX when we had the big pullback in the market. Next, we'll take a look at some of our different sectors. Looking at ETFs, looking at the TLT, which is the ETF for the bond market, we see that as the market pulled back Friday, no big surprise. Bond market pulled up, and we're still trading in a nice sideways trend for the bond market, running between those two areas, as the bond market is just going sideways, albeit very high for the entire year. Who would think bonds could outperform stocks? But that's exactly what's happened. Looking at the financials, we see the financials pulled back for the last couple days, and without the financials moving up, it is hard for the overall market to move with any kind of authority. This is the ETF called the XLF, which is the Spider Select Sector Fund for the financials, and we see that it's pulling back to the 50-day moving average, and we'll see whether it continues to pull back. Target may be there first, the 30-day moving average, and then around the 200-day moving average for the financials. Looking at our next sector, what we're going to look at as far as the ETF is concerned is oil. And we saw that we had that big jump up in oil, and then on Thursday and Friday, we had our reversal signal, pull back, and we'll see if it continues on down to previous support down there at around 29.50, and I would expect that if we see a further pullback in the overall market. Looking at gold, we see that it too had its pop up, but again in a down cycle, even though it finally popped out of that range and popped up to that area of resistance. We see gold again in a down cycle heading down to previous support. So that's the GLD, Spider Gold Trust Fund, giving us an indication of what that sector has looked like during the last week. Next, let's see what kind of volume we had, as we see that here we have Monday, Tuesday, Thursday, Friday, and there's the previous Friday where we had the big move up in the market, which was the beginning of our breakout. And we see that on this high, we got a big tip off, because look at the volume on that high. Showed us that the conviction was being lost and the auction was headed down. Got our reversal signal on Thursday, and then Friday we had big volume down as the market pulled back. And we'll see if that continues as the day goes on. Notice a little bit of the rally as the day ended, kind of giving us a doji for last Friday. But remember, this is not a reversal signal until you get a higher high and a higher low And if we take a look at the futures, we see they're down just a tad, but pretty much what one might say is they're flat going into Monday morning. With that thought, that's what the market was during the last week. And for those of you that are gold members, we'll continue on with our charts, the charts that we've been looking for. I like to call these the horsemen, as these are the horses that the traders love to ride as we watch the market go through its up and down cycles. So for those of you that are gold members, stick around. For the rest of you, thank you for being here. And it has looked like a full trading week with earnings coming up. Lots of excitement in the market. Give us some volatility because that's where we make money when we're option traders. Well, with that thought, this is Butch Shorak. It's Options University. It's Monday, July 9th, in the doldrums of summer, and the excitement is all around us. Thanks again for being here.